So, good afternoon, everyone. This is Prem,
And this is Gauri.
and we're going to have our show basically regarding digital securities. So, digital securities is something which has been trending for the last couple of six
few
to
years now?
it's actually a few years, but really right now, actually in 2019, we see. It's projects coming to fruition regarding digital securities.
Yeah, it was a natural evolution, I guess. From we began with blockchain enabling global capital raise in the form of unregistered securities being issued, more popularly known as ICO issuances. But digital securities, in that sense, they are different because these are conventional securities, be it your shares, bonds, any form of ownership of income earning assets or asset ownership more broadly, or even for that matter, revenue sharing securities or instruments, which are now issued on a blockchain. And that's the key thing about digital securities. That is, these are securities issued on a blockchain.
Yeah.
Um,
So that brings basically to the point where you have these distributed ledger technologies, which are also called, which is basically the bigger term which is used, which gives that part of that first of all transparency, but also global kind of access towards it.
Yeah, I mean the key purpose of issuing a digital security on a blockchain or a distributed ledger is that it enables global accessibility for these securities. It enables disintermediation of this process to a large extent, which means that it reduces cost of raising capital, be it for a smaller company, a larger company, or for that matter across the spectrum of capital raising. Digital securities enables reduction of costs, disintermediating the process, and more importantly bringing a global pool of investors accessible to these issuers. And that's what makes it a phenomenon worth taking note of.
Because if you look at the traditional way of capital raising through its IPO, this gap of $20 million raise was basically non-existent because it's so intensive to go through to do an IPO.
Cost intensive, regulatory burdens. It was not tailored towards smaller companies,
Absolutely.
or it was not tailored towards startups wanting to conduct a global issuance. So, I mean, the ability of digital securities to enable an issuer, irrespective of their size, to access a global pool of capital, sitting wherever, be it Shanghai to San Francisco to here in Dubai. Today, we are able to issue securities within the confines of regulations and raise capital. This makes it cheaper, more efficient, and broadly reduces cost of capital to enterprises. And this is a great thing, because moment you can reduce cost of capital for an enterprise, you open a Pandora's box in terms of enabling many businesses to flourish, to thrive, to even start up.
Absolutely. So this niche, well, this not this niche market, but this market of medium-sized companies just didn't have that access basically towards the capital raise, and now through digital securities, this is going to change dramatically. But at the same time, we have to look also how are regulators basically looking at it. And I feel that regulators are still a little bit on the sideline, which they usually are, and just looking what the market is creating at this time.
Um, yeah, regulators. The famous quote is that regulation tends to be, they're not ahead of the curve, they tend to be behind, and there are reasons for that. before we go into that, I think the key fact to note is that what digital securities enables. If an issuer is going to go about issuing their shares or bonds or any form of security on a blockchain and make them digitized and accessible for investors, now what we have is a creation where you are able to replicate the ability a publicly listed company has, that is to be tradable on an exchange and raise capital via the exchange. Now an enterprise is able to do it via not going through the conventional stock markets or exchanges. So here the key challenge is, let's look at what is the dilemma facing the regulators. You have a 150-year or a 100-year legacy financial systems which has multiple intermediaries, be it beginning with the broker dealers, the exchange houses, the depositories, and the exchange in itself, and then the whole ecosystem which lives around it, be it from the investment banks to your transfer agents, all of them. They are there to serve a purpose which gives the regulator comfort that public money will not be used or accessed by operators, malafide operators. Now with an issuer going via the digital securities route, the regulator has to gain comfort that the fact that this technology is able to disintermediate this process still confines to their core objective, and that is to protect the mom and pop investors or your retail investors or investors
in general,
in general, yeah, at large. And a private company accessing global pool of capital needs to also confine to certain basic governance standards. How do they make sure that an issuer of digital securities is able to give them that level of comfort where the private company or the issuer confines to global or accepted level of governance standards, transparency, and will ensure that in an investor's capital, or what they say that they're going to do, or what they do with that capital is, adequately captured from a supervision or surveillance point of view.
Yes. So blockchain definitely takes out the middleman, which is, a couple of middlemen, but at the same time also look at ways to make this process easier and cheaper.
Definitely. Cheaper, yes. Disintermediation increases efficiencies and improves on the cost of raising capital. It enables you to access a global pool of capital. So, those are key facets of a digital securities issuance.
So these regulators take steps, but they take baby steps. They take, if we look at the SEC or the FCA in the UK, these regulators are definitely looking what's going on. They have different kind of sandboxes basically created, especially to just look and learn themselves in which way basically things are going. So these regulators are very cautious because they don't want to disrupt the normal market as it is, right? I mean, if you today you issue a bond, you get this ISIN number, and then you can go to different terminals, for example, and have a look basically what that bond is doing, and you can follow it. How will digital securities look differently than it has been done up to now?
So the reason I believe regulators are taking baby steps is because something as a paradigm shift in the form of digital securities enables is something that any regulator needs to approach with caution, because remember, at the end of the day, a regulator, financial securities regulators key objective is to protect mom and pop investors or retail investors, and then investors more broadly at large. Let's look at a little bit, let's go back into history and see what happened. So we used to have securities issued in the form of paper certificates, let's call it the analog form, if I may. Then you had them transitioning into electronic securities. That is like how we trade shares now, be it in the Dubai financial market or for that matter any global stock exchange. Is that okay? So now our shares are tradable electronically, and now we have securities being issued on a blockchain, which are the digital securities.
Yes.
So when we had the transition from paper-based certificates to electronic shares being traded, there were investors who still wanted to receive those paper certificates because they were not comfortable that the electronic shares would be held in the depository and so forth. So now transitioning from the electronic securities to a security which is issued on a blockchain and globally accessible pool of investors. Investors themselves would need time to accept this change. So would regulators. So do I wish the regulators were more swifter in their approach? Definitely, yes. But to be fair to them, I think in 2019, if this was 2017, yes, I think we would have had more issues to grumble about.
Sure.
But given that we are in 2019 and we've had more global regulators coming to terms with the issuance of digital securities, I think we need to give them a shout out and say, great, at least there's some traction. But another thing, let's look back at how regulators began approaching this. So initially, when we had the possibility to issue securities on a chain or on a blockchain and enable global accessibility, and if you were to go to a regulator and ask them, hey, how would I go about issuing this? The approach was, we are technology agnostic. What we are going to look at is the substance over form. And they said, okay, we have the existing securities regulations. Now you are going to issue these securities. We don't really care whether it's a paper format, analog or electronic or digital. Follow the securities regulations, which was what the approach has been. Now, the issue with that approach is that digital securities transcends some of the processors involved. It eliminates certain intermediaries. As a market professional, I would like to consider some of these service providers as parasites, because they live off the front-end traders who are there to make money out of money. They eat off the investor's return for providing a service which more often than not necessarily adds that extra bit of value. It probably provides that little bit of certainty or assurance on the settlement cycle or so forth, but it doesn't really enhance the life of an investor's experience. So that's why I like to consider themselves as some of these service providers or these intermediaries who exist in the conventional securities world as parasites, because for obvious reasons they eat off our lunch. Now, the ability of digital securities to eliminate some of these intermediaries is key. But remember, this is an ecosystem that was built over 100 years, 150 years, or 50 years. And these are existing entrenched incumbents within this ecosystem. So their ability to lobby with the regulator to say why you should not allow this technology, or you should not allow it so fast that it makes us irrelevant, our services irrelevant to moving forward, may also be a contributing factor. So that's probably where all the fear mongering comes from, all this skepticism comes from. But I think in the end, the consumer would be the beneficiary, because moment you have these two forces debating out what's best and what's not, if the technology is so good that it eliminates intermediaries yet is able to achieve the core objectives of the regulations, who benefits? The investors. And given that we are into this, 2.5 years into this process now, of issuing digital securities, I think we should stop grumbling about this now and look forward from here on, because we've made some steps, maybe call them baby steps, but I think we are into a new dawn, and I think more sooner rather than later we will have more clear, concise regulations from these powers that be, that to tell us exactly, this is where they stand. And I think probably if you look at the Malta Stock Exchange recent discussion paper, the Gibraltar's discussion papers which have been issued recently, these have begun to appreciate the ability of the technology more to disintermediate, and I think they probably, it's a step in the right direction.
Yeah, I mean, I totally agree with you that these smaller, financial hubs have basically come out with something. But I really am looking forward actually to see something from the SEC or the FCA out of the UK, or for that matter, MAS out of Singapore, and for that matter also here in Dubai from the DIFC, what their take is going to be as markets, have been basically, if you look at the number of issuance which happened in the last decade, basically the number has been declining, but at the same time also the cost of issuance has really grown up. So a company to raise again a 20 million US dollars have been like impossible to do so.
Yeah, so I guess what you mean by has reduced is the number of IPOs
Yes.
coming out of some of these major exchanges. Yeah, the number of IPOs coming out of key exchanges have shown a declining trend as opposed to an ascending curve, to speak. And this could be a multitude of factors involved there, but definitely the cost of conducting an IPO or cost of conducting a capital raise using conventional market participants, conventional players, has only increased or is prohibitive to more smaller, medium scale players. And also remember, all large entities started out as a startup.
Yes.
Right. Now, it's really important that the ecosystem exists to nurture and nourish these startups.
Mm-hmm.
Right? The conventional commercial banking space is the worst partner for a startup, right? Beginning with their processes, procedures. They're not attuned to what a startup needs, People have been calling for disruption in banking for decades now, right? And it's high time that we had that, but that's a different topic altogether. But the ability now for us, be it a startup, a medium-sized company, or even a large-sized player, to take charge of their capital raising initiative in the form of conducting a digital securities issuance, looking at this new and evolving landscape, and to see how they can reduce their cost of capital. Now, this is the key thing. This is what we should have our fingers on, because that's where the evolution or the revolution is happening.
So in that matter, also investors should be actually, standing in line to look at, a cheaper way to less cost basically to be paid for participate basically in new companies. But at this time, investors are also need to be educated in this matter.
Yeah. So the investors are not flocking in troves to lap up on the latest digital securities offering or so forth. There have been considerable investments which have come into this space.
Absolutely.
No doubt about it. But they're not standing in line. But hey.
But if you look at the biggest STOs up to date, basically,
Yeah.
I mean, we look at T0, for example.
Yep, T0 had a decent size raise in excess of 134 million.
Exactly.
US
So
dollars.
I mean,
I don't know the exact numbers, but in excess of 100 million T0 raise. We had the World Bank issue their bonds on a blockchain out of Australia.
Yes.
In partnership with
Commonwealth Bank.
Commonwealth Bank.
In Australia. So they did that as a world first. So that is something that
We have Bitbond, regulated out of BaFin of Germany,
Yes.
issuing securities to the retail in Europe. We've had the second securities or digital securities offering now approved by BaFin again out of Germany. Within the US, we've had multiple private placements within digital securities. So we're chugging along in the right direction, probably not at speeds that maybe you and I would want to see, but hey, any progress in the right direction is progress nevertheless.
I totally agree on that, but at the same time, I also really like that educational part towards the investor to see what the possibilities are and what kind of vehicles are available to do this is something we need to come out more and talk about as it is.
Yeah, definitely, because if only when we have multiple investors participating, we can have secondary market liquidity for these digital securities. Secondary market liquidity enables price discovery, brings in that many more people to participate. We have a 30 trillion worth of capital market, if you take the globe cumulatively, and this is, a rough estimate. I really don't know whether it's 30 or 40 or 50 trillion if you take all capital market securities across all the countries in the world put together. Now, this is a large pool of capital that's deployed across multiple asset classes and investment vehicles. Now, if digital securities is going to take a chunk of this capital market space and slowly change it, improve the efficiencies, reduce the costs, so on, it's really important we have investor participation. We have a very active and dynamic secondary market. So in this regard, secondary market space, we've had multitude of players entering this space, beginning with T0, who wants to be a national exchange out of the US, enable digital securities to be trading on par with, say, the NASDAQ.
Exactly. So T0, Open Finance are a couple of players basically who are trying to come up.
We have our own, in our own backyard here in the DIFC. Our friends at Token Market have taken many leaps forward in trying to build an ecosystem for us here. Our friends within Shares Post are doing an excellent job in enabling secondary market trading of private companies. So there are players who are enabling the creation of secondary market liquidity, and it's a matter of time. It takes time. 1x Exchange out of Singapore, very impressive with their recent listing of one of the asset management companies on their exchanges. Licensed, regulated private marketplace to enable tradability.
Yeah, so for secondary market, you can see two things happening. One is that marketplace, basically, where private companies come in and are able to do their transactions behind doors. And then we have, really as an exchange, as we know it in the present day, that want to have that kind of liquidity, market making, and accessibility, where you're able to do 24/7 kind of trades, which is due to tokenization, which can then evolve.
Yeah, now, okay, 24/7 trading for a licensed exchange. I think Prem has just about given most of the regulators a hard take. Remember, these are people who work from they don't work from dusk to dawn. They have limited hours, so that's why the markets are open for limited hours, because they are preserving work-life balance and so forth. Yeah. So now you will have regulators working 24/7. Now, the jokes apart, yes, we have the technology to have market surveillance happen 24/7. NASDAQ has been a pioneer in this, has enabled many such surveillance systems to be used from exchanges like Gemini to multiple other exchanges. And yes, that's a key thing Digital Securities can do. That is 24/7 tradability of securities, global accessibility across all countries, or rather globally, to enable investors to participate. So if we have a great issuer out from here in Dubai, we don't have to confine the capital raise to Dubai, UAE, or GCC, or today we can have investors from China to Hong Kong to San Francisco to South Africa participating in this race, and that's what Digital Securities can enable.
So that number of participation will only grow as they also get educated on how to participate in these offerings, and then also see how they can do trades basically easier. I mean, you and I, we can both think that, okay, take out your mobile phone and there is something like a wallet and things like that. But more importantly is the fact that, we still steps.
We need a Digital Securities exchange come out and give an investor the ease of buying a digital securities, post of course having done their research and so forth, and taken a calculated decision on the risk and the capital, and having consulted their relevant advisors, be it tax, legal, compliance, everything. But when it comes to taking the decision to be it buy or sell, we need a Digital Securities exchange come out and give out the front end and do what, say, Coinbase did to the crypto world.
True. So, we're waiting for that actually, to have that kind of experience.
Yeah. And we hope our friends in token market can lead the way in this.
Yeah, that might be something if they are able to, come out very soon with the regulators getting their license, and then turn up basically the music to open up a secondary market, creating liquidity, and creating also more and more participants to come and join that team.
Yeah, on that note, thank you very much, and let's keep keep our eyes closed on this space. We will definitely do our bit to keep you updated, and let's talk about taking digital securities to the next level and having them accessible, tradable, and let's tokenize the world. Thank you.
Absolutely. Thank you so much. Have a wonderful day.